Good morning, everybody. Happy Tuesday. I know it feels like a Monday, but it's not. It's Tuesday. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. What are we talking about today? We're going to talk about, well, Dennis says he has a good story for us, so we're going to talk about that. But we're going to talk about a couple of macro headlines. We have a new oil embargo. China's all trading higher because they're reopening over there a little bit. We'll talk about last week's rally, setting the stage for this week. Bitcoin having itself a morning so far. Bitcoin on its first 9-week losing streak ever, heading into today, or this week, I should say. Let's see if that continues. Nate Tobik is our guest. We'll talk banks with him. He is the author of the Bank Investor's Handbook. That'll be at 8:35. So smash that like button. Let's get this show started. Where's my intro? Here it is. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Okay, let's bring on Mr. Elconin, Mr. Dennis Dick. Guys, good morning. How was everyone's weekend? It felt like a very long weekend to me, yeah?
It was a very, yeah,
Too long.
It was that extra day, man. That extra day. But it gave the pumpers a chance to pump the S&Ps up to 4202 and a quarter. Triple D's target 4200. Did it Sunday night while we were all having hamburgers and hot dogs and grilling. But bottom line is we're down 24 handles at 4132. It's 70 handles off the high, though. Crude, well, Russia's pumping that. It's up 363 at 118.70. Gold down a smidget, down $4, 1853.10. Silver back under 22, down 52 cents, 21.58. The Bitcoin bulls were out, little thinner market. Let's pump it up 29.65. Up 10%, 31,780, and Ethereum. Let's go back to 1972.50, up 226. Triple D, you must have worked very hard yesterday, right? Because you didn't no holiday in Canada.
I don't get the holiday in Canada. I got to work the Canadian holiday and the U.S. holiday, so I'm just always working. But no, actually, I did take the day off. It was a nice day. I actually had a great weekend. Took the kids out to Blue Mountain. Have you been out there, Blue Mountain, Collingwood, Joel? You ever been out there? The ski slopes? Obviously no skiing this time of year.
No, I have not been to that Blue Mountain. I've been to a different Blue Mountain.
Beautiful out there. Kids doing roller coasters. Oh, that's not fun because I have to go on with them. And there's this roller coaster 3/4 of the way up the mountain. And I get a little bit of motion sickness on these things. And you have to ride, and they want to ride it. And 5-year-old and 7-year-old, they can't ride unless you're 12, or you have to ride with an adult. So I'm stuck going up on this mountain. It's climbing, click, 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 and then you're going down and down and smashing me around. I felt like I almost got a concussion from it. But anyways, I did make it and survived. But I have a good no. though.
So well, before you say that, I just want to ask her if you took them there because you thought you were going to get a good deal on skiing.
No, there was this time of year. The skiing's really cheap.
There's a Blue Mountain in Pennsylvania that I've been to, but that's not the
same. That's one I've been to.
Yeah, that's not the same one that you.
Different.
All right, let's hear your story. Let's start out Tuesday morning story.
Anyways, I did. So it's been a lot of years that I've golfed, Joel. A lot of years, and it finally happened. On the 9th hole of the Blue Mountain Golf Resort. Yeah, on the 9th hole.
You got a hole in one.
Oh, right, yeah, right out of the tee box. And I hit it out of the tee box. It hits the protected bunker right in front, rolls onto the green and into the cup. In one shot. Par 3.
How far?
How far is a good question. I would say about 15 yards because it was mini putt.
Oh.
How far you got me on that one? About 15 yards. The guy behind me was impressed. He's like, "You get that hole in one?" I was like, I did. And I actually don't think I've ever got a hole in one on mini putt before. Mini putt's tough, man.
Really? A
Mini
mini
putt's
putt?
tough. This one was tough. Anyways, yeah, so
Yeah.
we'll have to wait for it in regular golf, but I am a hole-in-one champion of mini putt on the ninth hole. The boy was impressed.
That was your first ever hole in one on mini putt?
I don't know if it was
Oh,
actually,
okay.
but I think so. I never played mini putt.
Oh,
It
okay.
probably was. I haven't
right.
played mini putt since I was a kid.
Okay.
So, but took the 7-year-old mini putting. He was doing the hockey shot everywhere because he plays hockey, so he's literally like Happy Gilmoreing everything out there. Yeah. And I was getting my feel. By the ninth hole, I was getting my feel, and I was like, watch this one, and boom. Yeah.
Awesome. Well, Joel and I hung out over the weekend a little bit. Joel and I had some fun. We went to the Van Gogh exhibit, which was a little bit true. Wasn't it trippy, Joel? It was trippy.
Yeah, it was. You're in this room and all night. I got a quick putt story though, real quick.
Joel's got a whole pile of hole-in-ones on mini.
All right, I'm next then.
Okay. So I hope she's not listening. But I had this old girlfriend in high school, and we used to go to putt and stuff. And I would let her win sometimes. I wouldn't let her win sometimes. So this is one of the times I didn't let her win, and I was crushing her. And they had signs up that if you lose like so many golf, if you lose a ball or something, you got to pay for it, right? So we're near the end, and we're on the last hole. We're on one side of a busy street, and she just winds up and just whacks the ball as hard as she can, and it goes across the street like a busy road. Okay, and I'm like, okay, so I got to pay money for that, and I'm like, here, went and got another ball, to do it again. So she tees it up again on the little putt, whacks it again across the street. So she
cars.
got I don't know if she hit any cars, but what I thought was a cheap putt date, and I was going to crush her. She ended up costing me more. Then the third one, I said, no, I'm not getting any more balls for you. I'm not going to do that. What's my putt story? Spencer, you have a golf story?
No, I was joking. I don't have one.
All right, let's talk stonks.
Yeah. Joel and I discussed this a little bit on Friday. I think half seriously, but just in case it looked like all signs pointed to a big weekend for the movies and for Top Gun, and I know Dennis put a trade on for it as well. And that appears to have been the case because that's basically your lead. It's a quiet morning in terms of the market. I know we have some macro things to discuss, but in terms of individual stock specific headlines, the only real one this morning, today at least, that matters is it was a great weekend for AMC. It was a great weekend for Top Gun. I couldn't believe it when I saw that it was a record-setting Memorial Day box office weekend. I couldn't believe that there's never been a Memorial Day box office better than the weekend the Top Gun just had this past weekend. But that's the case.
Yeah, but you know what though? Inflation, right? So I mean, ticket prices. That's the whole thing. They always compare, the gross sales.
Yeah,
which should be like numbers of tickets sold. Because when me and Joel were going to movies decades ago, you could go to the movies, Joel, it's $5, $6. What's a ticket to the movies now? How much?
What, I haven't been in a while, but what, $13, $14, $15?
You're not getting them under $10 anymore. And I would always go on Cheapy Night, and it was like how much on Cheapy Night for you, Joel, when you used to go to the movies? When like $4, $5? It was probably like $1 for Joel.
Yeah.
Back in Joel's day, is going to the movies for a quarter.
I mean, Gone with the Wind was one hell of a movie. I mean,
that was a nickel. That was a shiny new nickel to go to that one.
Anyway.
I mean, it's not fair to compare. This is the best boxy inflation. Let's talk ticket number sales. So that kind of, this is the best Tom Cruise movie. He had great movies back in the day. How much was to go to the original Top Gun per ticket? That would be a better way to compare it.
Right. So let's just go off what AMC themselves said. AMC said 5 million people went to an AMC theater this weekend, and 2.5 million people went Memorial Day last year. So that's something. Again, I think, and maybe we should bring up the chart of AMC here. If you're buying, there it is. If you're buying AMC stock up now, I don't know. I mean, good weekend, but is really going to continue.
It's got the GME thing
Yes.
going on. It's got,
Yeah.
and I'm actually disappointed in myself. And I guess I should listen to At the Close, but I didn't listen to At the Close on Friday. And you guys were talking about this,
You
but
were
I was
on
like,
it.
I put the Top Gun
No,
trade on.
before.
I put it on. I was like, I'm buying Paramount at the close because you guaranteed it's going to be a big weekend and Paramount's going to be up. It never even crossed my mind on AMC. How much I think about AMC, Joel. That's how much it shows. It didn't even cross my mind. So I bought Paramount. I figured that was, the maker of the film. And I made one. I've already sold it. I made 1% on it, which is a nice trade. But AMC up 11%. That was the trade, man. I screwed that one up.
Oh, Paramount had a nice rally into it. AMC just got over 1650. Just made a pre-market high, 1662. So we'll keep an eye on that. A quick back off. Looks like there was resistance at 17 or just above 18. Let me see if I can. There's some stuff in the mid. Not much. Maybe if they really could juice this thing, 1709. That was your high back on April 26th. But first things first, I think the higher up you go, the thicker it gets. But 1709 would be my next daily high that I'm looking at. That was from April 26th. What about did IMAX respond or these other ones or not as much?
Not. I mean, a little bit.
It's
No.
AMC. It
Little
gets the
bit,
hype
Yeah.
But it's
going.
Yeah.
I mean, this was a total drop ball by me. You're putting on the Top Gun trade, being long AMC into this weekend would have been
Yeah.
a no-brainer. I mean, obviously it was running up into it too.
It was.
So maybe if for whatever reason it didn't get the good sales, it would have got hit maybe. But wow, that's a layup there, and I took the wrong layup.
That's okay. But all signs are pointing to a big weekend, and it was a big weekend. I didn't go. Put a 1 in the chat if you went to go. I don't care what movie, but if you went to the movies this weekend, just put a 1 in the chat because the three of us did not go.
I
So
haven't been to the movies since COVID started.
okay.
And I don't know. That's going to be a different experience now. So
What's that movie I saw, Spencer? Again, I can't even think of the name of it.
You saw the Nicolas Cage one, the unbearable
Nicolas.
weight of massive talent, which
if I was on Rotten Tomatoes, 6.
Seen a lot of 1s in the chat, a lot of 1s. All right, and some 0s, which okay. Okay, what else is going on here this morning? We have a couple of macro things that I mentioned. We have a new oil embargo from the EU. So if you're seeing oil up today, that is why there is a ban on 90% of Russian crude oil by the end of the year. That's covers 2/3 of Russia's or of imports from Russia.
And oil keeps going.
Oil. So that's one macro driver of the day. The other macro driver of the day is that China appears to be inching towards a reopening. They're reopening some schools in a couple days. They're reopening some public transit also in a couple of days. So China is inching towards a reopening, and all of the Chinese stocks that we know are trading up on that. So those are your two macro headlines here today.
It's
some
a
good
mixed
news
market.
there. Yeah, I was just
it feels like
that.
It's really weak, but there's a lot of stocks trading higher here. I mean, there's a lot of like the social media darlings, like the GameStop, AMC, obviously, but I'm seeing a lot of tech holding up. Oil's obviously up, but there's a lot of tech stocks that are still flirting with the green too. So, yeah, we're down for sure. But surprisingly, you come in, you think, everything's getting killed. There's some stocks that are holding up fairly well. It actually feels like a growth value. It feels like a sell value by growth type of day here. That's at least is what is happening so far in the pre-market. I mean, Kathy's barely down. She's only down 0.4%, which isn't even down as much as the market. So that's always a good tell. First thing I do in the morning is, what kind of day are we on? Bring up ARKK. And it's like you see the S&P down 26 handles, like ARKK is going to be getting killed, but not the case. It's kind of holding up. So far, it feels like they're still buying the dip and those beaten down growth names, which obviously have been beaten up the most. So
we just want to, going back to Friday, the way they, they juiced it in the close and they juiced it in the after. I mean, the last after hours print going up 10 handles higher, and then 6 p.m. open, just no offers in there. And they
too long ago for me to even remember.
Yeah.
I don't even remember Friday.
Yeah, and then did he come on the show Friday or was it Thursday, Spencer, when Dennis
I'm
came
pretty
on?
sure it's Friday.
Yeah, I
Yeah.
came on Friday. And I still didn't catch you guys with the
Yeah.
AMC
Well,
tip off.
it may have been before you hopped on. I think that's right.
Ah,
Yeah. Sorry.
I screwed that.
But but Dennis's point though, I mean, we were up basically across the board. We've been leaking now steadily throughout the entire overnight session here. So that's why we're red, at least in the stock index futures. But we're coming off of a good week, first up week in since March. Yeah.
Phew.
So reason for optimism. The
Yeah.
question now is, do we believe it? Or what? I don't have the answer, but I guess that's the question that we're going to find out. Interesting stat that I saw. I don't know how much it means, but interesting nonetheless. This is from Bespoke Invest. Last week, from the open to the close, so 9:30 to 4 p.m. The S&P was up every single day last week from the open to the close.
Wow.
That's actually pretty rare that happens. It's only happened 50 other times in the history of the SPY. The SPY came out in 93, so it's about 30 years old. So that's only happened 50 other weeks in the last 30 years where the market, the SPY was green from an open to close basis every single day for a week. Overnight obviously messes with that a little bit because but yeah, so again, just a great day, a great week last week, and so far it's not as if we're crashing. We're just not green again, but that's okay. So
one thing to consider here, and I think it is a concern, is the 50% retracement of the move, which we talked about on Friday's morning show. 460 on SPY down to 380. 50% in literally 7 days takes you back to 420. That's where I said was a likely target. We hit that target overnight. We won't hit it on SPY, but we hit it on the S&P futures overnight. We ticked 4,200. So we actually hit the target. So are they taking it off now that we've hit it, or do we hit it in the regular session too? That's still to be determined. But if you think you're buying stocks on the cheap, you're chasing. You're absolutely chasing at this point in time. I know it doesn't feel like that's beat up, but if you're buying S&P, I mean, this is a huge counter. This is a huge counter move. And I think you got a natural resistance point at 420, which tells me you should be selling stocks into the strength here. At least, maybe not the beaten down Kathy names, which we feel bottomed 2 weeks ago, but all the other names that have been holding up really well, they've had a nice rally last week. They got hit, and now they've rallied. I mean, Apple came back big time from the low, Joel, 132 up to 150. This is a big bounce here. Microsoft, same story.
Yeah.
We've had a nice bounce already. So you're not buying on the cheap anymore. I think if you really need stocks, I think you got to wait for a healthy pullback here now.
Yeah. Well, they finally hit the big stocks, right? And that's what everyone wanted, right? The S&P hasn't corrected, and so they got that out of the way. And the Apple iPhone Bloomberg headline took it down to 137.5, and then you got a nice bounce there. So what everyone wanted the fluff to come out of the market, right, out of the big stocks. And it did, and then you got the rebound, a little bit of rotation into the growth. Like I said, I mean, you could be from a pure number standpoint, yeah, 3,800. That's like 3807.50. We're never going back down there. That's good, man, and we got some solid footing. I guess we don't have to worry about any more earnings bombs, right? We've got a lot of those.
No, that's not necessarily
There could be
true.
some.
There are actually a couple. I'm amazed. I kind of thought we were done as well, Joel. But when I was looking at the calendar, and I'll pull the calendar up on the screen right now, there actually is a decent number of big names.
The earnings season that never ends.
It never ends. So
tonight
we have Salesforce, and I mean HP doesn't really interest me, but Salesforce does. Later on in the week, we have Lululemon is Thursday.
GameStop.
Yeah,
that didn't make my list. What day is GameStop?
Is tomorrow.
Wednesday?
Yeah, that's tomorrow. I don't know. Wait a minute. Where's Costco? Are they not this week?
Yeah, it was last week. You're losing weeks here.
It was?
Yeah, Costco was last week.
Did I just blank on that?
Remember it got. I said they'd buy the dip on, and they did.
Oh man, I think
they got hit on the earnings, but it had been beaten up so much.
I have no recollection.
They totally came in. The big
no
names that are
recollection.
loved, they were buying the
What
dips on.
was that Thursday or Friday? I can't
It
remember.
was
Costco
Thursday.
was
It was before
Thursday.
it was
Thursday.
before the long weekend. I have no recollection of that happening.
Oh, and it feels like
Thursday
it was years
after
ago.
hours, though, right? Thursday
Yes,
after
yeah. So
hours.
whatever
Alright.
reflected in Friday's
All
trade.
right.
Yeah,
Yeah.
yeah. I mean, it was a good market too, right? If we would have been down, 700 points, it was, the tape helps out on days like that.
Yeah.
But we do
Yeah.
have some big names, like you said. Like Lululemon is interesting, obviously. CrowdStrike. I mean, there's another one there. Again, it's tough. See, everything has rallied so significantly. It's like, what are you buying? What are you buying? People are saying, stocks are beat up. We should be buying stocks. I'm like, well, that was a week ago. If you really wanted to buy, I mean, now you're chasing it again. Like when you go like this, and again, you're just going back. Stocks go when waves here. So you get the downtrend going. You're selling rips into downtrends and buying dips on stocks and uptrends. And I mean, this was everything ripped last week. So you're coming in now, then you feel like you're doing it backwards. So it was a nice rally. If you had been buying, I took some profits into a few stocks that I had bought on to Friday, or into Friday's strength, because when they're rallying that much, it doesn't feel like it's still this market that's going to hold these rallies. So we were pulling back here. Joel, where would you be a buyer of stocks? Would you get down to if we got down to let's say 4,000 S&P, would you nibble into some stuff?
For the week, I'd be a little bit lower than that. I mean, let's see if we get down, and not the fake not the fake intraday low, but the real Globex low from Friday, which was way down there at 40.41. Also have a weekly number in there. I mean, there's nothing wrong with having a little bit of consolidation here too, like holding the gains for the week, right? And then just a couple of inside days. We did calm down. That was one thing I did talk about, is like we were really volatile, but then we did the average daily range, has still been coming in. So, after a move like this, why not have just a little bit of consolidation, just a little bit of hanging out, and then, build the legs for another move higher.
All right. Again, so tonight, Salesforce, Victoria's Secret, and HPQ, excuse me, and ChargePoint. Those are kind of your big ones. Sentinel One, ticker S, is in there as well, but beating down tech. I wanted to talk about Unilever. That's one of your big stock moves of the day. At least it was last I checked. UL, how's it? Is it still up? It is still up.
Again, this is an ADR, so it's already priced in. So one thing to consider, you're not going to see this thing whipping and roaring and once market opens. This has been open in Europe here, not only today. This was open yesterday in Europe.
Yes.
So that's something to consider as well. So you've had a day and a half to digest this news. Give us the headline, though.
Yeah, Nelson Peltz is now on their board of directors.
We already knew Peltz had a big position.
We already
know
knew he had a 1.5% stake in the whole company. So pretty big position there. And now he's on the board, and he's a well-known activist investor that tends to look out for Wall Street and the shareholders. So Wall Street likes that he's involved now, or that he's more involved. And so Unilever is up on that.
I mean, it seems like this guy that gets pops off. I'm just going back to the Western Digital. Like, look at that. It got the pop off the Western
Was that
Digital.
Peltz too?
Was it? Was it Peltz?
You have the better memory than me, so you're probably right.
I can look right now.
Joel's got that memory, man. I have the goldfish memory.
I'm pretty
He's
sure
got,
it was. Yep.
The elephant memory. Never forgets.
I don't think it was, actually.
Who was it?
I'm just looking in Pro, and I don't actually see.
Who did the Western Digital in early May? They did the pump. It wasn't.
In early May? No. That was Elliot. That was what's his name?
Elliot. Okay.
What's his name?
Okay.
Singer. Is that his name?
Oh, okay. Okay.
Yeah.
All right. I'm wrong. Well, anyways, that came back in. I mean, these things are so hard to chase. He already had a stake in it. We see what the pre-market action is. So I'm gonna go with Triple D on that. If you go outside the parameters of the pre-market trading, I mean the Europeans are still out there, keeping it in line too. So keep an eye, pre-market high, 47.37.
And then the rest of my movers list is all just like crazy, like biotech stocks. Speaking of biotech stocks, though, I'm going to probably mention this every single day. The biggest biotech conference of the year in terms of stock movement starts on Friday, ASCO. So there's going to be a lot of biotech news, drug news, starting on Friday, and then also over the weekend, you'll see a lot of cancer-related headlines, and a lot of stocks making outsized moves because of it. So watch out for that. Also, want to mention that tomorrow is the date when the Federal Reserve officially begins unwinding, or I guess running off, whatever term they use now, run off the balance sheet. They're going to start selling bonds tomorrow. And because tomorrow is June 1st, and that's what they said they were going to do. So this is not new information. We know the Fed is doing this. They've already announced that they're going to do it, but tomorrow is the day that officially begins. So maybe watch out for that. Powell's meeting with Biden today at the Oval Office, which is, I guess, not a frequent occurrence. So there could be some more Fed speak today out of that. But just keep an eye on the Fed, as always, and yeah, that's what I got as far.
I mean, this is the whole problem of just coming in and going all in on stocks is they haven't even started. Like,
No.
I mean, we've had such easy money for so long, and all of a sudden we think, oh, the market can just swallow taking away the punch bowl, which we have been built on for the last decade. So it's tough. That's why like people say, when are you going to go all in on stocks? I'm like, I don't have any reason to go all in on stocks right now. There's just, I don't mind owning some. I don't mind owning 55% stocks right now. But on my long-term portfolio, I can't go all in here because there's just too many unknowns. We don't know how this is going to play out. I mean, higher interest rates, no more easy money. I mean, we've had the Fed put. Joel, how long, we've been doing the show 8 years. We always, when we went down, we talked about the Fed put, like we've got the Fed behind this market. The Fed is not even, it's not even a matter of the Fed not being behind this market. It's against this market. The Fed is against this market now, for rightfully so. So, we got the big rally because of that one little inflation data point last week. Let's see what the CPI data shows. Like, let's see, inflation starting to come in, because obviously oil's not helping. That doesn't seem to be stopping at all. So where I keep thinking you're going to get demand destruction, which is what the Fed is trying to do, whether they say it or not, it's what they're trying to do. It's the only thing that's, interest rate raising is trying to slow demand, to slow inflation. Until we start seeing it really, really show up, it's hard to just come in here and get rah bullish. We're going all-time highs. I can't fathom. I mean, and obviously, there's a lot of people out there, the BMO analyst, Craig Johnson, thinks we can hit all-time highs by the end of the year.
But not before.
Yeah, but not before we go to 3,500.
That's all. But still, okay, we go to 3,500. Who cares? If we're going to hit all-time highs by the end of the year, I should be all in stocks. I don't think that's going to happen. And Craig Johnson has been really good on this show. So it scares me when he says that. It scares me into stocks. But at the same time, I just think, like, why? Why do we have to go back to all-time highs besides every analyst wanting that to happen? Because that's what everybody wants. All the pension funds need it. Everybody needs it. But why does it have to happen?
I saw something interesting. I can't remember where I read it or saw it on Twitter, but this rally might be giving Fed okay, we didn't crush the market yet. We can get even more hawkish. So I it just because that's a big concern about the market was, the Fed, well, they'll lighten up because the market's getting killed. But you know what? Boom, boom, boom. That could be, nice. Market's back up. We got some more room. We can go 3/4. Oh,
well, I mean, yeah, I'm sure they watch that, but we all know. I mean, what they say at least is the primary thing here is inflation, and yes, they're willing to tank the market to tame inflation, but
they have to.
I know, but
they don't have a choice. It's not like you can.
To Joel's point, I don't know how much they're looking at the market. We're still at 41.50.
What are you talking about, man?
They're not looking at it at all.
Yeah, that's what I'm saying.
You don't think the Fed was looking at the spoons during COVID? And they were in there, and they're just like, get in there and buy.
Joel, of course they were. Of course they were. And that's what they've done for the last 10 years. That's why we talk about the Fed put. I mean, the market was defending, the Fed was defending this market. I mean, we talked about it on the show forever. That went out the door when inflation went rampant. That went out the door. So they're not concerned about this stock market anymore. It works in their benefit if the stock market comes down because it's doing the job for it. Yeah. So it's not like they can come in and all of a sudden, well, we better not raise interest rates too much because the wealth effect is going to knock down all this. It's got to show up in the data. And I don't know if the wealth effect, we were like, even talking to Blue, it might take a long time for this to really, start showing up. This rising interest. People don't just stop spending money right away just because their mortgage payment went up a half a point.
We're going to have Blue on the show this coming Friday, and we can talk about all of this. We'll talk about inflation, which comes out next Tuesday. And Dennis, your question, why do we have to go back to new all-time highs? Well, we can do that if inflation starts to really come down, which could end up being next Tuesday, right? Like a week from today.
That's the path to get there. Inflation gets in check and the Fed can be less aggressive. That is the only path. So why jump the gun and say, unless you're just speculating, and obviously we're all speculators, but you're just like, you're feeling it, that inflation's got to tick down. I thought it might start ticking down last month. That was not the case. It didn't tick down at all, ticked up, and the market got punished for 3 weeks. Now we're coming. When is the next data point? So CPI data point is, we have a date?
Yes, I always put. I didn't write it down, so I don't remember it. It's June 10th. What day is that?
Oh crap! It's right around my birthday.
Wait a minute. Wait a minute. Yeah. Wait, no. Yeah, it is June 10th. I don't know why I said next.
June the 10th. Okay, so we got another 10 days here.
Yeah.
And then we get to see if that data, again, if the CPI data comes in light, we're going to have a rip your face off rally. If it comes in line or hot, they will murder the stock. So it's still a little bit of a coin flip. There's still a lot of pricing. When I'm going out there, I'm seeing prices not come in very quickly.
Oh yeah.
When I'm building this house, and obviously it's different. Every single quote I get is it's go. They hold the quotes now, Joel. They give you a quote on something, Joel. They hold it for 7 days. That price is good for 7 days only. So you got to execute. It used to be, my builder says it used to be 90 days. He says now they sometimes give it to him. It's good today. This is the quote today. If you want it, take it right now because, and this is an excuse. I mean, a little bit to get you pressure buyer, right? So everybody's using it for an excuse. It's pressure buying. But this is just the world we're in, where the consumer still is a little bit price insensitive and they're buying what they need and they're buying it now.
And
so that's what's happening.
It's not as if supply chains are magically fixed. My parents are getting they need a new garage door. The garage door finally broke after it's the original garage doors on their house, so 60 years old, and their garage door fell off the wall, and so they need a new one, and they're not getting it until August. Because they just can't. That's how long
it doesn't come in.
It's right, exactly. So it's not as if, and unfortunately, the Fed can't fix any of that. So it's it is what it is.
And with China, and obviously a lot of stuff coming from there as they continue to lock down and fight their zero COVID policy. Or go with their zero COVID policy. Well, this is not helping any of those issues either.
They're coming off it a little bit, right? So schools and mass transit are reopening now a little bit.
Until the next 10 cases show up, which is inevitable because the bloody thing is everywhere.
I don't know.
You cannot not get COVID. It's almost impossible. I fought for a year and a half trying to stay and not do stuff not to get COVID. Impossible. No. It's impossible. You can't it's everywhere. It's obviously come down. The waves come down now because everybody got it. I know, and you're probably the same way. I know more people who have had COVID than haven't had COVID. Mm-hmm. You're probably the same way. Mm-hmm. So you're sitting there in China and saying we're gonna, lock down every 10 cases you get. They'll never come out. Every time, they're gonna open up a little bit, it's gonna come back. It's never going away. COVID is here forever. This is never going away, forever and ever and ever, and we have to learn to live with it. So China has to learn to live with it, but they're going to lock down and screw up our supply chains every time they get a dozen cases. This is a serious issue.
All right, that's a pretty yes, that's a pretty bearish perspective.
How is COVID? Do you think Joel? Do you think COVID's going to magically go away? It's just all of a sudden. Do you think 10 years from now it's still going to be COVID cases? It's not going away.
I don't
It's
know.
no magic cure. The vaccine sure helps you deal with the symptoms. Doesn't make it go away. It's never going away. Never.
I don't know.
We do know. There's no way. Is the flu going to magically go away? Are we going to never get a cold again?
So, some people don't get colds.
The biggest problem, though, is what I'm saying is this: we're taking right back to China. This is the supply chain. This is where the majority of everything comes from. And if they're going to keep shutting down every time we get a few cases, how's that fixed?
Okay.
How's that get fixed?
Well, here's how it gets fixed. We move the supply chains back from which they came to America.
That takes decades to do and put that infrastructure.
It's an infrastructure decade. Didn't you hear, Dennis? It's infrastructure decade in America.
That doesn't sound like a stock investing environment to me, though.
All right. Well, let's pivot here. We haven't talked about the financials yet. We've been saving that for our guests. I want to bring him on right now. Nate Tobik. He is the author of the Bank Investor's Handbook. He also runs CompleteBankData.com. He's joining us now on PreMarket Prep. Mr. Tobik, good morning.
Good morning. How's everyone doing?
Doing well. Do you have thoughts on any of that conversation?
Yeah, a lot of energy there. I mean, I agree, Dennis. This stuff is not going away. I used to joke, during COVID, I said if they put a tracker out for how many people have the stomach bug on any specific day, it's thousands of people in any city. They've got a cold or the stomach bug, but once there's ways to mitigate the risk and we understand what it is, we just need to deal with it and move on. But
how do we teach the Chinese government to do that? That's what we're dealing with this in North America. It's not bad.
Yeah,
their zero COVID policy is screwing up all of our supply chains, screwing it all up for everyone. They need to get off zero COVID policy.
I agree. I mean, a conspiracy theorist would say maybe there's something else going on there. There's some rumors of a power struggle, and the most Western facing cities are locked down. So it's thought provoking that maybe the ones who might get the information first and actually protest or do something are the ones who we've got COVID, stay in your apartment, and we'll let the dust settle. In terms of actually rebuilding things in the U.S. or moving things over here, I think that it's an interesting idea. I think it's actually a great investment because, so if you think about how much infrastructure, factories, all that stuff would need to be built, that's an enormous amount of money that's going to be poured in. So if you just step back and think about the Amazon boom from the last year or two, so we would hear of places in outside major metros where the cap rate on a warehouse is 1% or less, and the way the landlords or builders looked at this was we can put a warehouse out here, someone will show up to that thing. Be it Amazon or some other mail order distribution company. And this is going to appreciate by 50%. And my return's all going to be via appreciation, not actual cash on cash return from rents from tenants. And, so, if you drive on any interstate in the Midwest now, it's like tons of warehouses before you get to the city, and then there's the suburbs, and then the city, and then there's a bunch more warehouses, and it's just there's warehouses everywhere, and that was a huge growth environment for real estate investors. That was big for banks. A lot of banks were lending on some of this stuff. It's a pretty surefire investment. Lend on a building, and anyone could go in there.
Nate, what about, these banks, really have not participated in this recent rally. We're in a rising interest rate environment. Bank America's moved a little bit. Is there, you just mentioned, the warehouse potential money loaned out. Is there something else out there? Maybe exposure to China. I don't think we're positioned for another housing crisis out there, but is there something underneath the hood with these banks that the unknown, someone's going to come and kick aside the head and say, man, we should have seen that with the banks. Anything out there that you can see?
Yeah. So I'll say this, in a lot of banks, there is definitely a sense of panic. across the board is, I mean, there was the headline that came across this either this morning or yesterday. Credit Suisse is looking for capital options. I don't know if you'd seen that or talked about that.
Oh.
So, there's people out there looking for capital. They were a little too risky, but there's just a lot of panic because what's happened is we've had years of a falling interest rate environment, and what this meant is a lot of bankers just had to sit there and wait for the phone to ring. The demand was walking in the door, and now the way to find demand is you need to find growing businesses, you need to find purchase money in new houses, businesses that are expanding, and that's a lot tougher, especially if you let your network wither over the last 3, 4, 5 years. And so there's a sense of panic of what happens next. And so you've seen some banks move into the total garbage credit, the buy now, pay later stuff, the SoFi stuff, all of that. Everyone says those are fine credits. And if you look at these reports, they say, none of our credits are going bad. Yes, because in one of the greatest booms of all time, credits aren't going bad. It's when things start to turn that credits go bad. And, there isn't much to repossess on a Peloton bike. It's, I don't really see someone driving around picking those things up.
They're heavy.
Well, they're heavy.
Yeah,
You beat me to it, Joel. You beat me to it.
But
especially if I'm sitting on it.
So there's panic out there. And, the second thing is what's lurking beneath the surface is I think there's actually two things. One is we don't really know who the lenders are who own all the office space loans. So the number I've seen is something like 36 or 38% of people have gone back to the office. There's a lot of space that's just kind of sitting dormant. Rents have not adjusted. And it's actually crazy. And I know some office space landlords, and they're like, yeah, well, demand will come back. We're just waiting. And at some point they have to stop waiting. The second thing is a lot of these banks, when there was low rates, they went into securities. So instead of sitting in cash, they just sat in, they were buying treasuries or they were buying munis, and they wanted to get a little extra yield to juice their earnings. Well, now with rates going up, all those securities are marked down. So one thing to watch when banks report their earnings is they're going to have their net income number, and then there's going to be a comprehensive income number. So a lot of times a bank will say, we're expected to do $1.44 and we did $1.46. Then you look at the comprehensive earnings, and it's actually a loss of like 30 cents a share because they had to mark their securities to market. And just because of where yields are, all of those securities dropped like a rock in price. So, they were holding on to that as extra cash to, get a little yield, juice earnings a little bit and make some money. And then when we need the cash, we'll sell it. Well, that's going to be really tough to sell when you're sitting on a loss. And you actually have to recognize that loss, especially on some of the, the securities they're holding to maturity. Those are the real dogs. Anything that's marked that's held to maturity is we don't want to know the mark on that one. So the mark to market stuff is not great. You see that flowing through, and it's been coming across like crazy. And so big banks, I don't think are as exposed to this. Regional banks do have a significant commercial office exposure. They're the ones who lend on the towers in town. And then the smaller banks, they really have, they were sucking up these securities like crazy. And so that is a real loss is those securities marked down, because if they had to sell those things, they would not get that money back. And that impacts capital and everything. So there's a couple trends there. Yeah.
I was reading that this is the worst year for the U.S. bond market since before the Civil War. Just how bad it's been. If I could pivot for a second, Nate, what about all these like Main Street banks with I was in DC like a few weeks ago, and I was just blown away at the number of like Truist branches. That like every street corner is a Truist, and I know they bought BB&T, so that's why. But like I can't imagine that people are going into like all these branches, and I know like Capital One is doing the whole cafe thing or whatever, but like, I just can't even imagine that they're getting any value out of these branches at all.
I mean, yeah, I think you're right. Just think back of the envelope. What is it? Branch traffic's down 70 to 77%. over the last 10 years.
Oh my
So
gosh.
it's down like crazy. I mean, the bank, I use Dollar Bank, which is in Ohio and Pennsylvania. And I go into their biggest branch is about a mile away. And they probably have 30 cubes, if I had to guess. And then, room for, I don't know, 10, 15 tellers. There's one teller and all the cubes are empty except for one, loan specialist or something for someone who comes in for the free coffee and wants to talk to someone in person. And I mean, that's an expensive real estate just sitting there for no one. And I agree. Yes. Yeah. Branches are closing at about a 10 to 15% rate year over year. And so I think banks that understand how to do a branch with a very capital light model. So, this is my favorite idea for a branch is a bank puts a branch in one of these startup accelerators or a co-working space where they get exposure to all these other companies all the time. They could help them, give them advice. That costs almost nothing, $500 a month, something like that for the office, versus having a $1.5 million building on a street corner that's hard to get in and out of, and no one's going in there. People are all doing the drive-through. So if banks that could figure out how to do that branch light model where they still get their people in front of their target audience, think about also like trades, the construction, all these guys need loans. The whole business runs on loans. Get in front of them at a place where they are, make it convenient. And those banks are going to do extremely well.
Nate, what about how the Fed's handling things on the inflation front? We've haven't really. I mean, that number on Friday, you can put some stock in the PCE number coming down, but do you think they're getting a handle on this thing? How many hikes and how long do you think the Fed's gonna be pushing rates higher?
They've thrown a Dixie cup on the fire so far, and I think they're hoping. So this is my view on this is there's kind of a Goldilocks period where inflation, it doesn't stick with consumers. And I still feel like we're in that where people are noticing prices are going up, gas prices are crazy, but there's still a feeling that this is going to go back and it's going to adjust back to normal. And if the Fed's able to knock inflation out with some sort of a crazy hike or do something to kill it right now, that psychology will not set in people's minds. But once it starts to set that prices are going to be going up 6 to 8% a year forever, suddenly that's a really hard thing to kill. And that's when people start asking for raises constantly. That's when, like you're saying, Dennis, the builder, it's, hey, this is good for 1 or 3 days because, we don't know what the price is going to be. And once that mentality sets in, suddenly that's a death spiral. And that's really hard to get out of. And I feel like they need to do something to kill that off first. And the reason it's a death spiral is because people's psychology lasts a lot longer than the crisis itself lasts. So if you think back to 2008, I remember back in 2010, 2011, people would still say, oh, the economy is so bad and this is horrible. And you think it ended a couple of years ago. But in their mind, it was such an impactful event. It was like that trauma was in there, and it took years to work itself out. And so I think this is one of those things they need to figure out a way to kill this now. And so that's probably more rate hikes. That it should kill demand. That's the hope. And a short, quick recession induced by the Fed, I think, is better than some long, drawn out thing that we all suffer through.
Nate, before we let you go here, I think there was also a question in the chat, but it's also from me. What do you think about SoFi, just in general? Not the stock, just like the company.
I mean, here's the thing. If you had 1,000 people give you a couple $100 to lend out, and you expected to never pay any of them back, and you would dump that company before you had to be accountable to anyone, I think you'd probably make loans like they do.
All right.
That doesn't make me want to jump in.
Maybe it was not the answer I was hoping for.
So I took a look. I've actually taken a look at them and looked through the financials and everything. And it's just not so, what do they have? Like 12 billion in assets. they have the scale of a giant bank, but they can't make any money on it. The fact that someone with 50 million in assets can actually make a profit, and at 12 billion they can't. And I've seen a lot of people say, well, they just got their charter. They just got the charter. The thing is, banks could just get their charter and they're profitable on a small asset base. So if you can't figure it out at that level, what is 24 billion going to do it? I think the business model is fundamentally flawed. And I think a lot of the credits are pretty poor credits as well.
Nate, before we let you go, I see let's Triple D. You got anything for Nate there?
Nate's hitting it out of the park. I mean, with everything that is going on, I mean, it's tough.
Hope you don't own SoFi, Spencer. That's
what? Me? No. Of course not. Somebody.
But all of these, what about a firm? I mean, there's so many of these financial startup companies, and they're built on basically the free money policy here, at least short-term free money.
So here's the company that will clean up on those is Amex. It's the same thing. It's buy now, pay later. I swipe my Amex, and in a month I pay it off. Or pay never. And well, they actually have a buy now, pay later program they rolled out. So now you can break up all your stuff into chunks. They have the infrastructure to do this. Amex is interesting because it's a bank and it's a credit card. It's not just the credit card network. It's a strong brand. That's one way to play it. MasterCard, Visa. So the funny thing is, if you look at any of these payment networks, they all run on the MasterCard and Visa rails. No one is actually going out there to Paducah, Kentucky, trying to install their new terminal that runs on their own network. It just runs on top of MasterCard or Visa. So if you own MasterCard, Visa, and Amex, you pretty much have this whole payment space covered. And all of those are wonderfully profitable. And they're buying back stock. They're paying dividends. The stocks have done well as well.
So Nate, I see a guitar on your wall back there. Do you play the guitar?
I do. Yeah, I've got an acoustic. Then I have an electric guitar over on the other wall. Yeah.
Do you write songs at all?
Back in college, I thought that would be my thing, but no, it just never went anywhere. Yeah.
Because I was going to ask you to do a little impromptu on you.
No, that's not me.
You know why? Because I owed to Spencer. This is the last time you're going to be on with Spencer. Yeah. And everyone wants to know what Spencer's doing. He's hiring a Volkswagen van. And he's driving across the country, and he's going to be going to national parks. So that's what Spencer's going to be doing.
I want to do that.
We went out to some parks last year. They're packed. The places it's a mob scene with those vans. Really? All those, the BMW vans.
Yeah.
Okay. All right. No ode to Spencer, but anyways.
Nate Tobik, author of the Bank Investor's Handbook. He runs CompleteBankData.com. Great resource if you're interested in doing some fundamental DD on the banking sector. Nate, always a pleasure. We'll stay in touch. Have a great rest of your week, man.
Awesome. Thanks for having me on. Have a great morning, guys.
All righty. It's 8:53 now on the East Coast, which means we've got about 7 minutes left in this show. We can do some ticker time if y'all like. There really wasn't much else that was on my list that we didn't already cover.
Airlines.
Oh, yeah, you want to do that. Right. Okay, so airlines, there were about 6,000 flights canceled over the weekend, Joel, and according to Flight Aware, which is one of those airline tracking websites, which actually seems like it could have been worse. I don't know. To me, it seems like it's gonna. I just see a lot of headlines about brace for a bad summer. Everyone's flights getting canceled. I don't think that's true, but 6,000 is certainly notable. Again, I think this is kind of expected at this point because everyone knows that there is a general labor shortage when it comes to flight crew and pilots and stewardesses, whatever, flight attendants. But 6,000 flights canceled. I don't think this will impact the stocks at all today, but that's what you want.
Yeah, they're down a little bit. You think they'd be prepared for this, but obviously they weren't. I mean, you can always blame it on the weather. I mean, these charts are they're just messy, There's really, up. I mean, the Delta rally, I guess if you had to move from 15 to 18, maybe if it gets back down to 16 and a quarter, 16 and a half, halfway back up. But I mean, it's just messy. But I just thought that was something we should mention.
Let's see.
Ticker time.
Yeah, ticker time. We'll go to the chat. Oh, wait. Thank you, Brad, for the reminder. Amazon stock split. That's this week. Oh no, actually,
wow.
I think it's I think it goes into effect on Monday, next Monday, I think. And then Friday is like the actual split date, I believe. What about Ford from Miss Whitehorse in the chat?
I want to re-own Ford. It's gotta but again, I love the Lightning. I think it's gonna be a huge EV play, but they're selling gas guzzling trucks at $95,000. Nobody's gonna pay it. So I think the next quarter is going to be an epic disaster. It's a long ways away from the next quarter. I think the earnings are going to be a disaster. I think this will be the top of demand destruction. So I don't know if there's going to be anticipation of that going in. Is it beat up enough? Sure, it's beat up pretty good. I mean, it's come down. I sold my last of my shares around, I think 16. That's 16 and a quarter, and it's down to 13. I'd love to get this back under $10. There is, a play here. There is value here in Ford, but I'm just very scared of this next quarter.
I would just look at it. I mean, I think maybe people are looking a little bit more shorter term and, rallied with the market last week pretty much. The only down day in the market was Tuesday, and that's the day it was down. So really no major resistance here that I'm looking at. Probably a pile of paper at 14, but just today, just keep an eye on the previous day's high, 1363. You're only 9 cents below that. So if it can't get over there, work its way closer to 1375, 1380. I expect a little bit of a pullback and in Ford. The close, as I said, the close was 63. Yesterday's low is 24. So that's what I'm looking. I will say the eyeball indicator is saying more Teslas. It just pure in my neighborhood, and believe me, I don't live in a fancy neighborhood.
Yep.
There are more. They are gaining market share, and just like in my neighborhood, when I kind of walk my dog so old I have to carry it halfway around the block and then make it walk back. But I just seeing more Teslas out
They're
there.
gaining
So,
more market
yeah.
share overall, but on the EV market, they already have, the EV market.
Yep.
So they're going to lose market share on the EV market. Do not kid yourself. When all these other EVs come out, there will be other electric vehicles on the road, but nobody else can get them out there. I mean, we've been talking about it. You can get a Tesla. There's all these other ones. I'm waiting, wait on the list for the Lightning, wait on the list for all these, but you can't seem to get them. At least the Teslas, you can get them. So we are seeing that people will be going EV. They don't want to pay, $2 a liter in Canada or $6 a gallon in the States. People will go EV. EV is coming. Big time coming. And that's good news for Tesla.
Okay, wait. This is a good one from the chat from Keith McKinley. I'm trying to figure out what to do with Devon Energy. It was originally a way to raise cash, but it kept going up. Good problem to have.
Yes.
Good problem to have for Keith.
And I've been dead wrong on the energy trade. I keep thinking that oil prices are going to come in. I'm fighting the trend on this. Obviously, I'm not, invested in it, so I'm just missing the boat. I'm not short it, but I mean, I've been wrong. I keep thinking that eventually you're going to start to see oil stocks start to come down. They make all-time highs again. So, I mean, ExxonMobil's got $100 on the brain here now. It's $98.80. Devon Energy keeps going up here. So I guess the trend's your friend, Eventually that trend, I feel like it's overbought. I mean, DVN was $10 a year ago or a year and a half ago, $75 now. I feel like there's so much good news in oil, but they keep going up. So hard to fight that trend.
Yeah, I mean, you could try and, sell calls if you're super worried about it, but
that's such a crappy way to lock
I
in
said
your
if
investment.
he's worried about it. I said if you're worried
but
about
I just want to go on a rant here because that's what everybody says. I'll just sell calls against it. But what you do is you give up your upside and you take on all the risk. And this is why I don't write covered calls on my portfolio. Yeah, it's nice. On stocks that are going like this, it's awesome. The stocks go straight up, you get called away, and you left and you don't. And the stock.
Did you ever try those with short-term options, Dennis? Like really, like were there weeklies out there when you got your buck kicked doing that? Like shorter-term options, like like the 80 right now, like the weekly 80. They're probably selling that for $5.
Joel, in the macro environment.
Were there shorter-term options when you did that, or were you doing?
No, I don't think so. But you can still get your butt kicked in short-term options. Get your butt kicked all over the place. But I mean. All I'm saying is in the event where you have big extreme moves, option rating does not work well. It works well in oscillating. I know this crap, guys. It works well in markets that are slowly trending or this. But when you get like a financial crisis in 2007, ask the call The
Those
people
don't
who are writing all their calls, how they did in 2008. They blew out. That's how they did in 2008 because the markets dropped 60% in a very short period of time. So, I mean, you held all these stocks, writing all these calls and brought in all this 10% premium, and your stocks went down 60 on you. So that's where, it hurts. And then what happened to me was I wrote calls after the fact and got called away on my entire portfolio in 2009. And then we had a 10-year bull run. I can remember I had a whole pile of Qs and I kept some and I had calls written on, and I got called away on my Qs at $68. And here today, I still own some of these Qs and it's $307. And I was like, why did I ever write calls for that extra $2 I got? And, all of a sudden it's 307. So don't just think it's free money to write options. That's what the option gurus want you to believe, that it's just free money. Why would you not write the put? If you're willing to buy the stock down there, why are you not willing to write the put? Well, the reason is you take on all the risk and you don't get all the reward. That's
writing
the
puts
reason.
is a whole different story. Hey, just real quick before I go, did you see our LTHM on Friday? Our live event?
Where's that thing? I still own it. 33
That's
bucks?
why you don't need to look. See what it did on
I do
Friday?
better. I don't look at my long-term stuff. You're right. Holy, what's the deal with that? I didn't even know that did that.
Yeah.
The entire sector moved. I mean, everything.
Lithium is not going away. I would be a buyer of lithium stocks on pullbacks because lithium is needed for all this EV. And if you can find them at reasonable valuations, the problem is the valuations are not reasonable. But if you can, lithium is not going away. I like the lithium stocks.
All right, I'm gonna bug out here, and we're just holding that pre-market low. We went down there and tested it like 3 or 4 times. So keep an eye on that 41.2150. Not much over that. All the tickers we missed, I'm gonna go cover on pre-market prep plus, and be back with you guys later on.
Have a good one, Joel. Have a good one, Dennis.
Okay.
I'm going to head out as well. Send you on over to live trading with Benzinga. Actually, a bit of a weird day today because Mitch is out because he's moving across the country. Zunaid might be out as well. So I've got Ryan Faluna and me. Yes, I will be on a live. I haven't been on live trading in a while. So Ryan and I are going to hang out for a few, talk about the market, talk about some trades, talk whatever you want. It's a very free-flowing, casual show. We don't always have a list of things to discuss. We kind of let the market dictate what we talk about. So that's coming up right now. I'm going to end this stream, redirect over to live trading, which will start in a couple of minutes. So I will see you guys over there. Thank you for all the love in the chat. I very much do appreciate that. Drop me a like if you haven't already. Just hit the thumbs up button. That also makes me happy. Thanks to our guest, Nate Tobik. Thanks to all of you watching on YouTube, on Twitter, on Twitch, and even those of you watching on LinkedIn. The last thing, please remember all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Check out Benzinga Pro, guys. There's a discount code in a discount link in the description of this video. Check that out, pro.benzinga.com. Free 2-week trial for everyone. All right, I'll see you guys over on our next show. That's it.
We'll be right back.